Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 27th of December. Starting with the FTSE 100, which continues its bounce off the floor of that rising trend channel that was in place since September last year. The line nominally there now at 80.80. Above that, we're looking for the area of the 50 and 200-day moving averages, just above 8,200. Best case that we would hit that December resistance line projection, 82.70, maybe over the next week or two, but still a work in progress in terms of confirming that this market has hit the floor there at the floor of that rising trend channel. Moving on to the DAX, and here you can see that we've got a double positive signal in the terms of the bounce above the rising 50-day line that we had last week, and then the close of that gap. We need an end-of-day close basically back above 20,000 to give us the prospect of a 20,500 target maybe by the end of next month, obviously retesting the best levels of 2024. The other positive at the moment is the way that the RSI has bounced from just below 50, so that can be taken as a leading indicator on the upside, and indeed the RSI has pushed back above neutral 50 to stand just below the 52 level. If we do break down, the worst that we expect at the moment is the floor of that rising trend channel from this time last year as low as 19,300, but I suppose at the current levels that wouldn't be too much of a shocker. We did test the floor of that channel back in November, and obviously we had an overshoot to the downside back in August. Moving on to the Dow, and here the approach of the new president is closer by the day, and it looks as though after that early December rug pull, we basically bounced off the floor of that gap there, the November support gap there, 42,300, and above that we were looking for initially to get back to the 50-day line, 43,500. Obviously that would also take us back into that channel, which I haven't actually adjusted because I was keeping the faith with that. The other point is, I suppose, that we have bounced off RSI 30 there, and that has tended to be in the recent past the floor for this market. We had that shown up in April and also in August as well, and obviously the August push or pullback rather was one of the biggest buy points of the year. On the downside, not expecting lower than the gap floor, and hopefully the best case at the moment would be that we get back to 45,000 by the end of next month. We can get a quick end of day close through the 50-day moving average. Moving on to Bitcoin, where it still remains all about the 100,000 level, and that seems to have been a bit of a ceiling in the last week or two. The 50-day line, though, comfortingly is the support, so that's around 95,000. So in a little range between the 50-day line and 100,000, and at the moment looking for this market to break through that 100,000 level, maybe early in January, and then try and revisit the 108,000 highs. On the downside, a break of the 91 to 92,000 area could risk a worst case scenario target near 85,000. So that is the map there. Moving on to gold, and here we have been stuck at the floor of that rising trend channel, in this case from back in February, but it has been it's sort of seen that the market has seen that line around 2630. Above that, initially the resistance is the 50-day line, 2680, and then obviously that double November top, November-December top there through 2750. But I suppose if you're looking at this closely, you'll want to see that we managed to close above that gap area, 2655, really upwards, to give us that move to the 50-day line at 2680. RSI just below neutral 50, so maybe a day or two away from proving that this is indeed the near-term floor, and we can eventually head up to as high as 2900 in Q1 next year. Moving on to the stocks, and starting off in the Aquis market, and one of the leading lights there fundamentally is Ananda Developments. Has really turned itself around and improved itself this year, but here you can see that our faith in the stock has been correct, in the sense that we had a sideways shuffle above the 50 and 200-day lines. We already knew that we were in the run-up to a golden cross ahead of today's 22% rise in the stock. Our initial target here up to 0.57, basically retesting June resistance above that we're looking for 0.8 pence early in the new year, maybe even as soon as the end of January, given that we are in the run-up to a golden cross, and that is imminent over the next few sessions. On to a stock which I hadn't heard of, but seems to be going up anyway, and that is Bay Capital. We were looking for a vertical move, and that's what we're getting at the moment. The initial target here was 8 pence, and best case scenario target here 13 pence, which I suppose we could sneak in over the next week, holidays permitting, etc. But very nice turnaround there, and the start of the rally with that key reversal to the upside, a very charty and technically backed turnaround indeed as well. And also you can see that shares between the 5 and 13 pence area look as though they are falling just as quickly, or rising just as quickly as they fell. So it's a mirror image of the March-April descent that the shares had. On to a stock which probably gets the prize for coming back from the dead, which at the moment is a difficult thing to do, but it's Getech, and here you can see the possibility that we're breaking out of this extended falling wedge which has been in place since June. The only thing missing at the moment is that we need to get above the 50-day line at 2.2 pence. Above that, and we could be looking at the top of that triangle there from July, as high as 3.25 pence by the end of next month. A stock which has been covered here probably too many times, but keeps on delivering, is GSTechnologies, and here you can see we've held the last gap there, which we had back in the early part of this month. Found support at the top of the gap, which is normally a very bullish signal. In this case, it was around a penny and a half. We hit our third target there at 1.97 pence, let's call it, and looking for a fresh leg, maybe even by the end of next month, up to 2.9 pence to test 4-year highs through 3 pence. So punchy call there, but above 2 pence, looking for, or at least 1.9 pence, looking for the 3 pence area by the end of next month. Another stock which has been the gift that keeps on giving is Kazera, and here the fun started with the unfilled gap to the upside, and a sideways shuffle above a rising 50-day moving average back in August. We had the golden cross there back in September, and since then it's been progress within a rising trend channel, which has been in place since June. Top of the channel there, around 1.95 pence, and we're looking for that in coming days. In terms of what the upside could be after that, probably a good idea to draw a line over resistance heading towards the 2.9 pence area, and maybe that could be a target, a viable target there for the end of February, but certainly looking for 2 pence plus by the end of next month. Only back below recent sticky resistance around 1.3 pence, really delaying the upside scenario, but this little U-shape, V-shape type of move here looks like a mid-move, a bull flag breakout, so that would suggest there's plenty more to come there on Kazera. On to a stock which I don't look at very much, largely because it hasn't done very well in the recent past, but signs of recovery here at Petra Diamonds. We had that low there, which was briefly a new year low for the shares, a 52-week low for the shares, and bounced up like a cork in water. A little range breakout as well we've got here through 29 pence, and above that looking for up to 36 pence by the end of next month at an October resistance line projection, which is also the triangle, the top of a triangle in place since October. Moving along to a stock which was basically a bolt for the blue. It's almost as if a lot of shareholders got out in the aftermath of the IPO back in June, but then the buyers started coming in. But it looks like we've actually already heard that we've got state building here. Golden Cross has been achieved, and the run-up to the Golden Cross was a massive rally as well, so the shares up 50%, etc. Just hit that resistance line projection there from back in June, and that was around, well, obviously by definition, around 723 pence. That is, we're on target for a retest of that, while we're above, or if we can get an end of day close above the 650 level. So a little sort of technical trigger there above 650, looking for 720 plus still for our Raspberry Pi as a retest on the latest move. But the gap higher suggests that there's still quite a lot of momentum here, and perhaps a lot of people have been caught out. You can see there were hardly any red candles over the course of December. Moving on to the situation at Tiger Royalties, and here the tech-focused deal-making has done the trick for the shares. They continue to rise, broken through, well, the first target was to fill the gap there around 0.15. The second thing was to hold above the 200-day moving average at 0.16, and the third thing to do is to hit the top of that triangle there at 0.28, maybe by the end of next month, or the current rate of progress rather sooner. It looks as though the shares have turned themselves around with the deal that was recently announced. Moving on to Victoria, and here it was a bit difficult to call the turn of a downtrend, but here it looks as though the shares have got this W-shaped reversal in place above the 69 pence level, looking for at the top of that November triangle there as high as 102 pence by the end of next month. And that W-shaped turnaround looks as though it could be one that is sustainable just for a change, looking back at that daily chart. Onto a stock which I think I've championed alone in the recent past, which is Valereum. It's already on the case in the 5-6p zone, etc., with a break of the 200-day moving average. We had a golden cross there at 8 pence back in October, and hit our initial target there, 17.5 pence, blown the second one out of the water at 21 pence, and now we are looking for the next level up, which should be as high as 32 pence by the end of next month, while we remain above 20 pence. Multiple bounces above neutral RSI 50, so one in October there, and 3 since basically the beginning or the middle of November. So the wind really in the sails there of that stock. Another stock which I've also covered and interviewed as well in the recent past has been Zenith, and here we had our first target there, 2.3 pence. Second one, which seemed rather ambitious, up to 3.8 pence, and the third one, which is very ambitious, will be 6 pence, which is a resistance line projection from back in 2018. So things look as though they are turning around there, at least on a technical perspective, at Zenith. The other point to note, which is a nice point at the moment, apart from the unfilled gap to the upside today, is the way that the 50 and 200-day lines are both rising now, so that suggests we're in a golden cross, and obviously backs the idea of a 6 pence near-term target, which we're going for over the next couple of weeks, maximum by the end of next month. Ideally, we stay above the old resistance there around 3 3/4, so above 3 3/4, looking for 6 pence on Zenith. Finishing off with a stock I don't think I've ever looked at before, Zegona, and here we've got a situation where we're in this broadening triangle situation. The triangle in place since this time last year. Top of the triangle there, heading for 525 pence, and we're looking for that at least while we're above the 380 pence level. You want to tighten it up. Obviously, yesterday's resistance around 410 could be a stop loss ahead of a move towards 525. That's it for me today. More updates over the weekend.